The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman. My pleasure to be here Monday through Friday, 11 o'clock till noon Eastern time, of course, right now, the time that you're listening. And we had some fabulous shows this morning. Always listen to TFNN. I think you will find that the kind of information that you get here is really different. In fact, where's that email? I just reminded myself here. Let me see if I can find it. Paul said, I find it very interesting how the media is covering this crash. Most of the stations aren't even covering it, especially Channel 5. And CNBC Channel 5, that must be the local station. I think so. CNBC doesn't know how to handle it. They're finding it hard to find bullish spokesmen. They're nothing but cheerleaders for the Obama administration, but I get to tell you, it's going to be a bit going to bite them long term. I'm sure you won't be talking about this on your show. Oh, but I think you should. Yep, I just spoke about it. It's just really interesting. Yeah, you know, it's not, I wouldn't even say it's the Obama administration. It's just in general, the media really tries to shy away from what they consider to be their audience's theme. So I think that's really what it is. Okay, let's get down to the nitty-gritties. Peaky and the Den says when we go down 1,000 points, that is a crash. You know what? We've done that in a day in different times. So I'll go into all of this. Let's just go step by step. I'm going to go through all the charts. Yeah, we got the E-mini down 21. It was in fact down huge. It was way down at 1931, round number low, early this morning, and it's come back really nicely. It's come back just over halfway. The high of this particular bar was 1991. I'd say 60 points, 30, so 30 off the low. Yep, this is it. We're 50%. But at 50%, look what I've got on my 10-minute E-mini chart right here. We've had a peak from the low that was made in 1931. We've had a peak D once, pull back. We've got a peak D twice. I shouldn't say peak D. We've got to wait another couple of minutes before this bar is finished, but I've notated it as D. And you'll see that there's a left side, right side price time match, which went exactly to the lower one right there to peak F/B. And now it's gone. It's 2 bars early, actually. One bar early in this left side, right side price time match from the spike down that was on the 6th, that was yesterday at 9 p.m. Oh, in the evening, right. Okay, so this has come back all the way to where we were at that sharp pullback in the evening, and it hasn't filled the bar. And I suspect we got a little bit of consolidation. There was just a little too much enthusiasm, just far too many people were looking to buy the market this morning. I wanted to do that for my subscribers, but having not shorted the index, we've got some shorts that have been working fantastic, but we've also, my main focus was the longs that we've got. I spent a lot of time trying to give parameters to protect those longs. Some are some are slightly lower. One gave a dividend yesterday, and this goes to the Stan's question yesterday about dividend stocks. I said I'd email him. I did email him, and I said, I'm waiting a couple of days. I want to see how our dividend stocks are holding up. This is early in the game. Let me tell you something. I'll run the numbers, and as I run the numbers, let me show you something that's very interesting here. We've had a couple of peak A minus failures in the E-minis. So we're watching this. There'll be a peak a peak A failure if the S&P, which is at 1963, I don't care what the reason is, because we've had huge moves, starts to take out 1946 as support. And I'll say, uh-oh, you've got to just be real careful here. Let me move the 120-minute chart away here. Let me slow down my pitter-patter here. We'll slow it down. Okay, and now I'll give it to you. And take a breath. There we go. The Dow So the pattern that we were talking about, and I discussed yesterday, the other day with Tom, was the left side, right side match. I have to go here to this one here. So I'm going to show you, this is what I showed subscribers. I've been showing subscribers for weeks and weeks, that there was a parallel with the May high of 18,351, and then that final breakdown in August the 18th, 19th, what the heck was that? 18th? Yeah, the 18th failed, and then the 19th started to crash down. Broke that trend line. Up until when I gave my my update, which I hardly ever do, but I wanted to do an update for my subscribers to my opening call yesterday at 2:30. We had the chance to just close slightly above that trend line and then rally a little bit and go up to about Dow 17,180 to 17,220. And that would have been a perfect place to say, I think we're matching this series of much lower highs and we can go to much lower lows. That's what I was thinking. But with the close yesterday, well, it was too late, because by the close, we had already closed down right here. And now I can show you what I'd already, this is so, it's pathetic. I was busy working on this last night. Everything looked just great because I'd done a refresh. I did a chart, a clean chart, and I was showing the beautiful match. And then I was busy counting the bars and I said, oh no, look. It was 42 bars from that high of May, the 19th, to the high that was made on the 16th at 18,131. And this is 37 bars. That's within, the error. There were 5 bars. So I was expecting a little pop to the upside, but I should already have said, no. Big chance of a failure here. Start putting on your shorts now in the indexes. I'm not talking about other where we have shorts. I'm talking about the indexes. So I missed that. So that's what I was focusing on. So by the time I sent this out this morning, we had already, the futures showed we were already going to gap down, right? So what I was showing is, are we here? Are we here? Or are we here? And obviously with this move, we have to consider, we're in the phase right now that is possibly the August cascade to the downside. That's the match that I have to go with, because we closed decisively lower. No, we never did that before, except for this bar on August the 20th. But the thing was that there was a chance that the stochastic could still, because it was on its way down, was almost about to turn. And yes, there was a deflection in the MACD. So my thinking was, all right, if there is any kind of a rally at all, this is the last day, because in my left side, right side price time edge, you take out that low, you've got a day maximum 1 bar, maybe 2 bars, but you've got to close above the previous low, and that low was 17,116 on the 12th of December. So that is out the question. That's why this rally, I didn't want to actually play this rally because I didn't know how I'd be able to switch from short to long, and we would have got maybe 2 points in the way that we wanted to play it. I really wasn't interested in that. And let me show you. Let me go back to this 10-minute chart right here. Wow, time's flying. Is that the first break? You see this peak D at that resistance level in the 10-minute chart? I must tell you, anyone who's gone long here, it's just a little dangerous, and I'll explain the reasoning behind why I say I think it's a little dangerous. I'll be right back.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So there's something else. Hi, we're back. Dow's down 157, S&P. Oh, I haven't done the numbers. Dow's down 157 at 60,749. S&P's down 19 at 1970. The comp index is down 63 at 47.72. Gold is up 12 at 11.0470. Silver's up 19 cents at 14.01. You've got high-grade copper back down at 2.04. Not so good. Crude oil, not sure where that is. Maybe unchanged. Yep, unchanged. At 33.90. 33. Oh, my goodness. And bonds are down just a half a point at 155.05. You've got the dollar down 37. The euro is up. So you got to watch that. In fact, I do want to get to that because I had questions about gold stocks. I'll be back in a second with that. But I'm going to squash this just for a moment. Look at this very, very large arch formation. Moving to the right, it's going at a steeper decline, a steeper velocity to the downside, in that we should have extended a little bit further to make this much flatter. In fact, we've started to break down, so the momentum of the trend seems to be accelerating down. The stochastic is really close to some kind of a bounce, but I tell you what, now I'm going to go to something else, and that's going to be important for what I'm discussing. See, the MACD's turned down very negative. Stochastic at 20%. I think we're going to the teens and then maybe even the single digits. How we do that just yet, I don't know. So let me just take this, move it away for the moment. Everything about this. So now to Bob's question, who emailed me about Dow. Was today a bottom or wait until next week for bottom? We're not, I don't think we can. I have to be very strict with my rules. One of my rules, lower lows and lower highs. Now we're finally seeing lower lows and lower highs, change of trend. Sell mode in the daily, regardless of how high we bounce, but that I shouldn't say that. Because if you had to bounce to the 200 period moving average of 17,400, I have to say, hey, that's really good. But in the meantime, just as it stands right now, the trend has to be weighted to the negative side. Okay. Now, when I go to, and the trend index is only at 1.06. And yesterday it indicated we should have a Chapman wave rebound of 9, maybe even 11 points on the S&P. We've done that. So it's fulfilled this criteria once again. But look at the volatility index in the 120-minute chart. This is either a peak, a leg F, or a brand new leg B. So let's just deal with that. We go one step at a time, and I'm going to run over to this chart right here, which is the weekly chart. Tomorrow's Friday. If the MACD crosses negative tomorrow, and now the stochastic's at 65 cents, I have no choice but to consider that the weekly chart has gone back to a sell mode. In 1 week, it's actually more in like 1 or 2 days. It's just gone from just being back at the sell signal sign to back at the sell mode. And that's really important. I will also I won't do it today, I'll do it tomorrow. On the technical side, I had questions about that Elliott wave. Remember, I've been saying this is Elliott wave 4. We were looking to see if we made it by just a penny to the upside to start 5. It changes the whole thing with my monthly charts, with everything. So keep in mind, I've been saying for a while, consolidation should continue. Even if we make that recovery high, I said, I still thought that January could see quite a bit of consolidating. And I got very nervous about the monthly charts being negative. And that's the bias. That's what we have some long positions. These long positions are really specific, either to dividends or to the strength that these stocks have shown. If we're stopped out, we can get back in. I'm not holding these things, anything other than this short-term stop, a couple of percent. That's all. I don't care. That's all it is. Okay. I'm being very agnostic right now. I'm not. My leaning is more now towards the bearish side. Bearish side because of weekly charts, not because of weekly charts and the monthly charts that I've been looking at in great detail. Now, to be faithful to my work, if parameters on the downside have been broken, that tells me that support's gone, and I have to stick with the trend that's in place until that changes. And that means, for how long have I said, I even wrote it up in great detail for my subscribers last week. I said, we got to watch the VIX. In the 15, 17 area, it's not great, but it's not that bad. Getting to the 19s and then stepping to the 20s, not good. In the 22 area, you've got to expect some pretty sharp declines. When you get to the 23 plus to 25 into the 28s, you've got to anticipate triple-digit down moves. But if you start to climb to the 28 or higher level, you're getting closer to a culmination of at least a short-term, sharp reversal with a powerful spike down, powerful spike up in the VIX, and a volume break to the downside that could give you a good 2-3 weeks or more of a bounce. I have to be strict. That's my rule of thumb. All right. Now, I wasn't strict enough to have started doing the short side when I had the chance. That Wednesday, a week ago, when we bumped into that resistance and failed, immediately I should have said, okay, Dow, now you prove yourself because I'm going short. You tell me I'm wrong. That should have been my attitude. Wrong. So you don't lose money if you aren't in the trade. But that's not the point. The point is the timing is what I like to do, and I missed the timing. I always like to get it out the way. I was bad in that particular timing. So now let me show you the 10-minute chart. Remember when I said peak D? There's another technique that I've been working on for months that I've been using, which has really helped me. It looks like it's Elliott wave. It has nothing to do with Elliott wave. I don't even know what to call it because I want to call it something completely different. I don't want to get confused between Chapman waves and this wave and that. So it's got no name yet. But in the meantime, it says we hit that target, that incredible resistance. I'd like to just check now on something. Let me go to, the chart that I have that has the Chapman wave resistance points. Yeah. 1970.75 on the 5-minute chart was the Chapman wave projection of resistance, and we went through a give me a break, can I see what it is? Yeah, 1969 round number high. So that was great. Now it says 1956 is going to be very important support, and it's got the 200 period moving average at 200 period support. This is very interesting. Look at this chart. Look at this half-hour chart and see what happened. 1929.50 was the Chapman wave projection for a low right there, and 1931 over there, right? 1931 was the low. So I like this. I'm actually starting to use it. I developed this 7 years ago or more. I use it periodically, but now I use it as just a confirmation. I don't actually use it as the projections. I just use it as a confirmation. All right, so here we are. We're back at the ranch, and we're looking at what happens at this particular period. So I said I would look at the gold stocks, and gold has moved very steadily to the upside. It hasn't screamed. Well, if you look at this chart, I guess this is a bit of a scream to the upside, and that weekly chart is a scream to the upside. So gold at 1104 up 1270 now is saying, hey, I've made some kind of a base here that should be in the 1060 area to the 1050 area, which should be pretty good support. I'll be back and we'll talk about it in a moment.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. I got some wonderful email questions over here. I'm going to try to get to them. Let me just finish this here. So this is leg C up in the gold, the GLD. It made a low on the 3rd, was it? Yeah, the 3rd of December at 10:45.40. This is the continuous contract, which is really close. Let me see what it says, 11:04, and the contract itself is at 11:06. So it's within 2 points, less than a point and a half. So what we're looking at here, in fact, it could be the same. It's just that I'm in a little delay with gold. So this is leg B in the weekly, leg C in the daily. But what's really important is that this leg in the 120-minute chart has extended to a leg E, and the MACD is good. The stochastic's at 84%. So that tells me that any pullback in the next day or two, let's just imagine now that there is a rally in the Dow. Instead of this chart pattern here, where we keep going down, there's something a little different about this. We've done the big moves to the downside, 1, 2, 3, 4, 5 that were made from the 18th of August high in the Dow. And we've now gone 1, 2, 3, then a doji, 4, 5. So out of 6 candles, 5 of them are these very strong down candles. So maybe we've used up the strength and we're going to rally and try to get back to the pink resistance line. That puts us at about 16,890 or something like that. Sorry, 16,008 or 9, 16,990s. Okay, so let's watch that. And what I'm looking at here is that the relationship I'm trying to say is that if there is a rally in the general stock market, if gold does not pull back below, it's at 1105 right now. If it doesn't pull back much below the 1090, below 1090. No. I'll give you a specific number. 1087. If it closes below 10, closes on a daily basis below 1087, and the general stock market hasn't broken down yet, it's saying now we can see a relationship between the stock market and gold, and it's saying gold is in play as a fear factor. All right? If in fact, but independently, regardless of what the market does, but especially if the market drops from here at Dow 16,738, S&P 1968, drops down another 0.5% from where we are. And let me give you numbers. If the Dow starts to go to minus 255 and the S&P starts to break into the 1947 area, then watch gold, because gold is going to go towards the 1135 200 period exponential moving average. So that's what I want you to look at. Let's look at a couple of, I usually like to look at ASA. It's just kind of a proxy for me. It's holding very nicely. It's at 760 up 1.74%. GG is probably one I should look at. Also, it's the same pattern at 1230. Let's go to RGLD. That's just not doing all that much. And this is the royalty part of it. So we're looking at specifically, one of my favorites that we haven't got, and Nova Gold down a little bit. Let's look at, Newmont Mining. Okay, Newmont Mining, not NRM, NEM, not doing that well. So this is very specific to some of the gold stocks. And just do SLV for the moment. Is it playing catch? Yeah, it's playing catch up, but it's still not a great pattern. For the SLV to be really strong, and I must say this is a move that I have to respect because it's been persistent, but it hasn't been strong. Not silver, I'm talking about gold. Silver has to break and close above 1362. It's at 1352 right now. And then all of a sudden, it's going to start to be attracted by the previous highs. So this is the starter position in the weekly chart to see whether or not gold on Friday, where it closes, is gold in play? If it's in play, we've got to think that the market, and I'll include the TLT. See, the TLT tried to break that resistance line. Let me move the resistance line to a more functional one. Right there, it hasn't been able to close above it. I'm going to be more practical now. I'm going to have 2 resistance lines because that's the way I like to do it, an inside track resistance line. It's made itself very clear. If bonds stall in this area up to TLT up to 123, can't break above it and just keeps pulling back and then breaks under 121.50, the 9-period moving average, that's just saying yields are going to rally somewhat here. You've got to be a little careful. But as long as the bonds are holding well, and there's that weekly resistance, we haven't broken the weekly resistance, and that would say, yeah, TLT has to go into the 123.50s to really, actually it should go into the 124.50s. And then you'll be looking at this market coming down very sharply. So in the meantime, it's just stuck. I've been talking about bonds being stuck in a trading range. I can't change the pattern on that. That's my take. All right. So, but it's worth watching. Is it worth buying the TLT? I just don't know yet. But believe me, if I'm getting more signals about the market weakness, I will jump on there. So so that's a couple of things that I want to do. Let me do a couple of questions. Crude oil, is this the low in crude oil? Is this a bounce that can be bought? Wow. All right, risk reward. I would have to say that because of market conditions, if the dollar, I have to do the dollar. Sorry, the question is on crude oil. If you don't mind, and gold. If you don't mind, I need to look at the dollar because the pattern I meant to speak with John Logan about, and this is going to be really important. I actually called John on his show this morning for a brief period just to ask him a couple of questions. I love his show, I love his thinking. So it was things that he answered, and I think that, and we were both kind of in agreement that it's a little surprising that gold hasn't powered to the upside, and that the bonds haven't powered much more. Bonds have been holding well, but they haven't really powered to the upside yet. And if you're looking at the dollar, there's a symmetric triangle that's coming to an apex. The high of 100.51. We managed to rally yesterday to the 99.63 level, but you see, there are always at least two fighting patterns. One is bullish and one is bearish. That is unfolding. And the question in the den is where was that? Duffy asked, dollar pattern, the cup and handle. Yeah, I think that's happening, and this handle can last a little while longer. Tells me bonds are going to be in a trading range, and that the dollar could very well stay in a trading range without breaking to the 100.52 for leg D in the weekly and extension to leg C in the monthly. So this is something I have to worry about because there are too many things stuck in the middle here. And look, the euro has managed to do a nice 3 waves to the downside. That's that lightning bolt pattern. And it happens to be a trough B. And that's kind of good to only go to a B and then rally. So the euro was making the arch formation. And now it's suddenly turned around and said, no, you've got me all wrong. I want to do this. I'm making a cup formation. So here are the fighting patterns. The dollar breaks. And this is answering the crude oil question. You're going to see in a moment how it ties together. So the dollar breaks support at 97.50. It says, watch out, because it closed below 97.19, the low of the 15th. Not good. It's a failure pattern, the right shoulder failure pattern. It's taken a little too much time to get back to the previous high. So, another time just flies when you're having fun. I will be right back straight after this, and we'll continue with the crude oil question and then a couple of questions in the day. Here's that 10-minute show.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. So this is what we're looking at here. The Dow's down 169, S&P's down 21, and here we go. So the cup and ladle is a pattern that says that if the dollar weekly just powered right through and closed sharply above the 100.39 level, you could expect even higher prices to a leg D. This is the cup and handle, and I have to tell you, Investors Business Daily, they've made a huge thing for, I don't know, for decades and decades about the cup and ladle. But the cup and handle, they don't talk cup and ladle, cup and handle. But the way they do it is they have special buy points within the cup, because if you don't get those down below the lip high, you are vulnerable. And then they always talk about an 8% risk, etc. Well, 8% is real easy. If you're buying at the high on the way down, it can be quite sharp. So it's a special way of doing. My biggest problem with the cup and handle is that invariably it breaks out, but then it comes back and it can retest very sharply into the cup and handle itself. In fact, I consider it a very unreliable way unless you use it very specifically the way they do, and there's a much bigger picture, and there's a little bit of a contradiction when you get it, because if you don't understand that you've got to buy it at certain buy points, you don't want to risk it 8%, because you can risk 8% a couple of times. So that's my way of looking at it. I'll do it tomorrow in my technical hour if I remember. So this is a very important period. You see that just very short term. Why? Because you can see now you're forming, this is left side handle inverse, cup. Now you're trying to match that on the right side. So we'll see there's a lot of resistance in here. If all of a sudden the E-minis go to 97, they're at 1963. They go to 1972.50 or higher, then you've got this left side cliff that it wants to climb. So this is a very important period. That's the reason why I'm saying just be a little careful here. As a trade, absolutely fantastic. If you bought the low this morning, which is what I really wanted to do, but I did not because there were so many other things we were doing, I figured if the market was going to rally, our stocks would be the premier stocks that would actually rally or hold very well. And that's the way I have to look at it. Now, let's just do this real quickly. So questions, a couple of questions in the den. Frank, FAX, I thought I looked it up the other day and couldn't find it. Oh, but there it is. So FAX is the Aberdeen Asia Pacific Fund, I think it's called, Pacific Income Fund. This is the company started by the best man at our wedding back in South Africa. And this is a FAX. It got bought out, and it's changed its complexion. But Brian had built it up from nothing back in Australia. So FAX, and it's trading at 4.55. And I had used it for years as a proxy, an inverted proxy for the dollar because it's an income thing. So that would say when the dollar was rallying, this would be declining. When the dollar was declining, this would be rallying. I don't use it that much anymore. Now, as an income thing at 4.58, this is a real good question. If you're long, Frank, then will it trend with U.S. bond funds? Oh boy, I think it's kind of, look, when you, boy, let me just do this. I think they kind of separated. I think it's a different vehicle, it's a different instrument. No, I'm going to say to you, I'm looking at only as a stock, as an ETN or ETF in this case. And all I can say is, yes, this looks like it could be a nice dividend stock, but you've got to be a little careful at 4.48. All it needs to do is to drop to below the support and go to the 449s, and you are down 10, you're down 9%. That's, well, what's the dividend going to do? So I just be real careful. If you got it, hold it. And all I wanted to say is this. It's on, I'm going to put it now on my list with a bunch of other stocks that I've been looking at as part of the dividend side. I think we've got to be looking at the dividend side here with this kind of market, because bad markets take down everything, the good, the bad, the ugly. But if you start to see stocks that are holding rock solid, and this will be the test, then facts will be, and I'm going to say to you, congratulations, you're holding it long, keep long. I'd even, because it's a longer term position, I have to say that the monthly technicals are improving. So I'd have no choice as a dividend stock. You've got to give it a little room. 450. Let's see if it goes to 450. Give me a yell. Send me an email or call my show or text in the den, whatever it is, if you see that it starts to break 450. If it holds by Tuesday of next week, if it's holding right here between 458, but between 460 and 453, and it's at 458 right now, I'd say yes. This looks like a really good stock to hold, to do nothing but get the dividend. So at this particular point, I'm just going to say, congratulations, you're holding a good stock. It's holding well. It is down 2 cents right now. But in fact, I like the action. I need just another couple of days for that weekly chart to close and then see how it opens next week. So I'll do a little more. I'll put it down. I'll look at it again Tuesday. Just remind me. Okay. Couple of things that I wanted to do here. Questions. So that the question was, so Julie asked about crude oil. So you see what I'm trying to do here. I'm trying to say to you that if the dollar is going to break down, and right now it's holding very nicely, but if it takes out the 97s as clear support, if it starts to break under 97, go back into the 96s, that's the opportunity. And all I'm saying is the opportunity for the USO to actually move higher. And it's not doing that right now. It's down 8 cents at 10.03. This is like a recycle ABC. I even have to maybe call this G/C in the weekly chart. I just don't see. I'm going to make a recommendation. Rather look at gold, the gold stocks, as trades to the upside, and wait for crude. Crude oil has even broken my look. Trough E should have been a very nice bounce. It went to a B, and now it's failing. Now it's gone to an F. Just be real careful. I'd avoid that for the moment. The risk to the downside is like a black hole. I mean, I don't even know what one can see there. So I'm just saying to you, if you're asking my opinion, I'm going to say lay off. We did it once. Took a tiny loss, I think it was. I'm not interested in USO until I get a much better sign. So that's that question. Next question is trannies. Trannies, IYT, I haven't looked at them. Actually, I've been looking at everything else. Oh, my goodness. The trannies, you know what? This is just confirming for me that you've got to be really careful here in the market. Things have changed. I'm going to, as we're going to this next break, I'm going to suggest two things. One is, I've been talking last year a couple of times. I said, take a little bit off. If you've got mutual funds or you're putting something away every month and all that, in those funds, take a little bit off. I said that maybe twice, maybe even 3 times, just a little. I'm not saying get out of everything. I'm just saying take a little bit off. Try to build up a cash hoard so that at some point there's going to be a really big market downturn, and you want to think about buying, putting it back to work there. So that's kind of my thinking still. and I'm looking at certain stocks here, and if they break, then I'm done with long side of just about everything, and I'm only going to be doing the short side for a while. In fact, there's a real good chance, in any case, that I'm going to be looking now to implement the shorts that I've been wanting to implement for a couple of weeks. So let's do this. Let me just look at this 10-minute chart. There it is, 10-minute chart. Dave, this is now, I have to put a down arrow, even if it rallies from here, that's fine. It needs to get a peak deep down arrow in the 10-minute chart. Hey, be careful out there. I'll be right back. Dow's down 190.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. Being Thursday, you got, this is a great day. You got from 7 in the morning. That's amazing. 7 in the morning all the way until 6 this evening. Andy Hector closes the day. We've got Ben in Tallahassee. Ben, how are you?
Hey, Basil, very good. I know I got a little time here, so I'll make this quick. But if you look at the monthly, 5-year monthly on the VIX, it is now over all three key averages, the 50, the 9, and the 200.
It is absolutely right. And this is only
like, yeah, go ahead. And it looks like it's only in peak C, right, on the monthly.
Well, it's at a peak C in the monthly. That was the China, the whole debacle, that crazy August day. I couldn't understand why it went so high to 53.29. It was really unusual action. I mean, if I looked at that, I would have thought that the Dow was down at 13,000. But that's the way it is.
Of course, if you ignore that, though, it's at the end of the day, it's still over all three key averages.
It's absolutely over the key, but this is still only the first few trading days of the month. But we've got to look at the weekly chart because we've got one day to go, and the weekly chart is at 23.38. I am not going to ignore that. We've just made an inside A peak A, peak B, leg C in the daily, and the previous peak C minus was at 2681. I do not want to ignore that at all. If that volatility index stays above 22, 2250 into the rest of the day, that really puts a severe upside limit. So I'm with you, and thank you for pointing it out, because I looked at it, but I forgot to actually even talk about the monthly because we've just started the month.
Well,
but
and my main question, I guess my main question then is going back to the monthly. I mean, do you feel that, I mean, I know the stochastic is just turning now. Do you feel that, you know, maybe it I don't know. I mean, maybe it does.
Okay, let me just be real clear. When I'm looking at the monthly charts, you see, the Dow closed just a fraction above the 9-period exponential moving average in December. In 2008, it closed just underneath, and that said, great. Now I can say sell signal in the monthly, and we could go from there. If we had one more day, I would have got the sell signal in the monthly on the monthly chart of the Dow. So I'm going by the months. I want to be strict by that. But if I look at so many of the charts, they are not acting very well. If I just went through the IYT. So I have to be, even if we have a real sharp oversold spike to the upside, the way I'm looking at it right now, the tide appears to be changing in the more intermediate term ones. And the big question is, will we see Dow 18,500s this year, or is that out the question? Will I actually get that wave 5 to the upside? So I'm with you right now. I think that what we're looking at is something to take in mind as being pretty serious as we're speaking. And you've just spiked above yesterday, 2 days ago, the high of 2336. So if we've gone to 2346, the VIX is not letting up. I think you've got to be real careful. So I think that's where you're leaning, right?
Yeah. Anyway, I just thought the monthly's always, you know, a lot of people ignore it.
But the monthly, believe me, everything started to turn up. The arch formation in the Dow that we saw, that very long arch in the daily, is almost what we're seeing in the monthly. I have to respect that. That's going to be my major focus for the rest of the month, believe me. So in the meantime, back at the ranch, you got to be really careful. If you have longs, got to put in stops. Short plays are probably the way to go. Hey, thanks so much for calling, Ben, and pointing that out. Ben in Tallahassee, Florida. Good question about the VIX index. Yeah, let me do this as we're about to wrap up. What is it? Oh, we're going to the swing lesson. Think or swim. Go programming all day. Should be a wonderful day of programming. So look at the VIX, 2336. If it remains in this area, if it actually accelerates a little bit more, I just don't see how this market can hold. And then what we're looking at is that pattern that I showed you a little earlier on. Where did it go? Oh my, where did it go? Where did it go? Well, it's the pattern that I showed you on the somewhere over here of that monthly chart of that August pullback. You do not want 3 days, the same kind of thing for 3 consecutive days. And that's a possibility. Just be real careful. And I'm handing it over now to the Think or Swim folks. Great programming. Thanks for being here. Check out my opening call. I'll be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.